Dave.
Through you, Mr. Mayor, I can confirm the meeting is live.
Okay, great. Well, good afternoon, everyone, and welcome to today's Audit Committee meeting on June the 20th, 2022. The City of Kitchener has aligned with provincial changes to COVID-19 restrictions, and City Hall is now open for in-person services, but appointments are still being encouraged. The city remains committed to the safety of our patrons and staff and continues to facilitate electronic meeting participation for members of the public. Those people interested in participating in future meetings can register to participate electronically by completing the online delegation registration form at www.kitchener.ca/delegation or via email at delegation@kitchener.ca. For those who are interested in accessing the meeting live stream video, it's available at www.kitchener.ca/watchnow. Any written comments that have been received by the clerk would have been circulated ahead of the meeting to members of council for their consideration and will form part of the public record of the meeting. Before we begin the meeting, we'll begin as we normally do with the land acknowledgement, and that's that today we gather on the traditional territory of the Neutral, Anishinaabe, and Haudenosaunee peoples. We recognize our responsibility to serve as stewards for the land and honor the original caretakers who came before us. Our community is enriched by the enduring knowledge and deep-rooted traditions of the diverse First Nations, Métis, and Inuit in Kitchener today. We'll now move on to the agenda items, and the main and only item on the agenda today is the audited consolidated financial statements. Greg Damasio, our Manager of Financial Reporting and Analysis, will get things going. And I will note that Matthew Beddick and Courtney Cheel from KPMG are here, as well as Ryan Hagier, Director of Financial Planning, and of course our CFO, Jonathan Lautenbach. So with that, over to you, Greg, and I think this is your first official financial statement. So welcome aboard.
Thank you, Mayor Urbanovic, and thank you everyone for having me here today to present the 2021 audited financial statements. Just a quick note before we begin. You may have noticed that attached to the staff report that was submitted for today's discussion, we've included the consolidated financial statements of the city, as well as the financial statements of the city's various consolidated entities. But we've not included the full financial report, including the financial discussion and analysis, which has been included in recent years. This was due to time constraints resulting from significant changes to our financial reporting team this year. However, we will discuss some financial highlights and key financial indicators as part of today's presentation. And the full financial report will be completed and posted to the city's website in the coming weeks. Next slide, please. In terms of today's presentation, I will start by going through a few financial highlights from 2021. Next, I will go over some reminders of how the audited financial statements differ from the variance reporting provided throughout the year. Then I will provide an update on the city's key financial indicators as laid out in the city's long-term financial plan. After that, I'll turn the presentation over to KPMG to have them present the findings of their audit. Next slide, please. So looking at the consolidated financial statements, we continue to see growth on both the statement of financial position with respect to net financial assets and total non-financial assets. as well as on the statement of operations, where we see growth in total revenue and total expenses. We've continued to see an ongoing impact from the COVID-19 pandemic, while also seeing some resumption of regular activities. For example, following the start of the pandemic and the ensuing drop in interest rates in 2020, the city paused most of its investment activity, leading to a significant drop in investments. In 2021, with less uncertainty around cash flows and the beginning of higher interest rates in the market, the city began investing more again, resulting in an increase in investments. This year, we once again saw that other user fees and charges were under budget. This was mainly the result of some facility closures and programs that were suspended or modified as a result of COVID-19 restrictions. We also continued to see reduced parking revenues. We also saw that total expenses were lower than budget, mainly due to a number of staff being transitioned to one of the emergency leaves on a temporary basis, as well as reduced utility consumption due to facility closures and reduced capacity at facilities. Finally, we have seen an increase in reserves, specifically driven by a large increase in capital reserves. This is partly due to significant funding the city secured from other levels of government in response to the pandemic. Next slide, please. So in March, you received a staff report that presented the financial results for the year ended December 31st, 2021, specifically for the tax-based operations and for the city's enterprises. The consolidated financial statements being presented today include the results of more than just the tax-based operations and enterprises. They also include the various local boards that must be consolidated, including the Center in the Square, Kitchener Public Library, Belmont Improvement Area, and Kitchener Downtown Improvement Area. They also account for the city's two government business enterprises, Kitchener Power Corp and Kitchener Generation Corporation. And finally, they include the city's capital activity and the activity in the city's reserve funds, as well as other adjustments made to comply with Canadian public sector accounting standards. Next slide, please. So the current slide is meant to demonstrate the difference in the annual surplus on the statement of operations in the consolidated financial statements compared to the operating results that were provided to you in March. The total operating deficit for the tax base and enterprises presented in March was approximately $1 million compared to a surplus of $106 million presented in the consolidated financial statements today. The first contributor to the difference is the requirement to consolidate certain boards, as mentioned earlier, and to record the change in the investment in the government business enterprises. The addition of these items adds approximately $11 million to the surplus for the year. Further adjustments are then made to these combined results to have them reported in line with standards set out by the Public Sector Accounting Board, or PSAB. Some of the larger adjustments required to comply with PSAB relate to the city's tangible capital assets, or TCA. For example, the recognition of revenue from contributions of TCA and an expense for amortization of TCA. Transfers from operations to capital or reserves funds and transfers from capital or reserve funds to operations are removed in the consolidation, as these are an expense in one fund and a revenue in another. Another significant PSAB adjustment involves the treatment of debt repayments. Both interest and principal payments are treated as an expense in the operating results, whereby PSAB only allows for expensing of the interest. So taking all of these items into consideration, leads to the annual surplus as presented in the consolidated statements of approximately $106 million. Next slide, please. So the city's first long-term financial plan was endorsed by council in October of 2019. The plan includes 5 financial indicators that, when looked at together, provide a good representation of the city's financial position. For each of these indicators, we present both a 10-year trend analysis as well as a comparison with a peer group made up of other lower tier municipalities with similar populations. Please note that the comparison with peers in each case shows data from 2018 through 2020, as 2021 data is not yet available for most municipalities. So the first indicator is taxes receivable as a percentage of taxes levied. If this percentage increases over time, it may indicate a decline in the municipality's economic health. As you can see, despite the financial pressures of the pandemic, the city has remained well below the recommended maximum and is right in line with the comparator municipalities. Next slide, please. The second indicator looks at reserve balances compared to total expenses. The city's reserve balances have grown each year for the past decade, but the city's ratio has only risen above the recommended minimum of 20% in the last 3 years. The city is on the low end of the range relative to other comparator municipalities. Council is encouraged to continue setting aside funds when able to do so, so that reserves are available to ensure future liabilities can be met, capital assets are properly maintained, and sufficient financial flexibility exists to respond to economic cycles and unanticipated financial requirements. Next slide, please. The next indicator is looking at debt charges to own source revenues. The annual limit for debt principal and interest payments set out by Ontario Regulation 403/02 is 25%. Credit rating agencies prefer that principal and interest payments should be kept below 10% of own source revenues. And the city recently implemented a new capital financing and debt policy, which reflects this 10% limit. The city is well below both of these targets and is right in line with the average of the comparator municipalities. Next slide, please. So the next indicator we will look at is the debt to reserve ratio. The city's declining debt and increasing reserves has led to vast improvements in this ratio over the past decade. For the last 3 years, the city has been at or slightly below the benchmark for this ratio of $1 in reserves for every dollar held in debt. The city has been slightly above the average of the comparator group, but is now slightly below the average as a result of the improvements made. Next slide, please. The last financial indicator we will look at today is the ratio of financial assets to liabilities. A ratio of 1-to-1 ensures that there are enough financial assets to cover off all of the municipality's liabilities. The city has maintained a steady ratio and is slightly higher than the average of the comparator municipalities. Next slide, please. So overall, we can see from the key financial indicators that despite the significant challenges of the last couple of years with the pandemic, the city has maintained a stable financial position. This has been accomplished through a combination of the city's commitment to sound financial management and fiscal prudence, as well as significant funding support received from other levels of government. So I'm happy to take any questions from the audit committee that the audit committee may have at this time. And I'll also be available for questions following KPMG's presentation.
Okay, Council. Questions of Greg, and then we can also do any additional ones if folks have them after the auditor. Councillor Singh.
Yeah, Mr. Mayor, just very quickly, on the investment income, as in interest rates are trending upwards and the likely a consideration that they will remain high for some time, are we hoping that the increase in revenue from investment income can offset some of the revenue losses, especially on the fees because of closures in their facilities or reduced demand?
So for 2021, we did see that investment income was lower than budget. The increase in interest rates was more so towards the end of 2021, which might help to explain that, as well as the fact that our increase in investment activity took place more towards the end of the year. And so we did also see a decrease in investment income year over year from 2020 to 2021. Looking forward, we do have a significant investment balance, which we expect will generate a significant investment income. As to the implications for the budget, I would say that will likely need to be examined as part of the budget process, unless either Ryan or Jonathan wanted to add anything there.
That's fine. And before they do, I saw Mr. Hagee keyed in. I had another question, and I think it's ideal for him to be able to answer that as well. Related to debt, can council be reminded how much debt are we planning on, or if any, taking in 2020, 2022 as part of the budget that's already approved? Or is any anticipated debt that may be part of the proposed 2023 budget? And if that's the case, would council get any opportunity to make a decision early on to defer on taking on the debt, especially because of rates that we're looking at right now? So that's all of my questions. Thank you, Mr. Mayor.
Greg and then Ryan.
Sure. So just to flesh out a little of what Greg said on the investment side, since we saw such a deep decline in investment rates, the bounce back that we're seeing now will probably bring us back to kind of where we had hoped we would be, or where we budgeted to be in 2023. So it will probably not offset any decreases that we may be seeing in shortfalls in revenue on the programming side. But who knows, if rates continue to increase, that it may be able to offset some, but definitely not all of the decline that we will likely see on the revenue side. Regarding debt, I forget the exact amount, but we already have issued, I think it was over $5 million in 2022. We issued in the spring before the rate hikes started. So we were fortunate enough to get on that early. So we have already issued that debt. There is some debt related to the Rangers that is getting refinanced in the fall, and that is already in the works. They've already signed off on the agreement. The region's already approved it. So for 2022, there is no additional debt to be issued aside from the Rangers refinancing, which is already essentially a done deal. For 2023 debt, I again forget the exact amount. It's somewhat smaller. It's only $1 or $2 million worth of debt, I believe, that we're planning to issue in 2023. And anything around that would be discussed as part of the 2023 budget. So nothing would be approved and issued until council said okay, which would happen as part of final budget date 2023.
Great, thank you. Councillor Davey, you're up next.
Yeah, just one question, Greg, if I could. Just want to be clear. I thought I heard you mention it, but all of the enterprises are included in all of the bar charts, like the assets to liabilities, all those charts that are in your presentation. But the investment and the hydro utility, is that included entirely as well?
Yes, so the ratios reflect the consolidated results of the city, which includes full consolidation of the local boards, as well as the investment in Kitchener Power Corp and Kitchener Generation Corporation.
Okay, thank you.
Okay, that appears to be all of the questions. So thank you, Greg, and we can maybe move on then to the presentation from our auditors. Welcome, Matthew.
Thank you. So if I could just ask to have our presentation brought up. Perfect. And as the mayor noted, with me at the meeting is Courtney Cheel, the senior manager on the account. And so I'll take a few minutes to walk through the presentation. As usual, if there are any questions, I can take them as we go, or spend some time at the end to deal with any questions. So just to reintroduce myself, as you know, Matt Beddick, the lead audit partner from KPMG. Those who may recall, I've been away from the file for a couple of years. That was due to mandatory rotation requirements to help maintain our independence. But I'm happy to be back and seeing things again with the City of Kitchener. If I could advance probably 4 slides down, please. Perfect. So in terms of where we are in the status of the audit, and we've advanced since this report was completed. So we are at the stage where we're for all intents and purposes done. We have a few minor sort of checks and ties to complete, but do anticipate being in a position to issue our final audit opinion subject to completing this exercise, having the financial statements approved by council, and a few other sort of minor things between KPMG and management. These are all typical things at this stage of the audit process, so nothing to be concerned with. And then if there are any issues or concerns, we will update the committee, although at this point we're fairly confident there will not be. In the our report, as well as in the draft financial statements, there are copies of the draft auditor's report. So these are the reports we do intend to issue. These auditor's reports are clean audit opinions, so there's no qualifications or modifications, which is what you would expect. And we're happy to say we're clearly in a position to issue those as presented. If I could go down 2 slides, please. We are required under the audit standards where there is a change to our audit plan or audit strategy that we communicate that. So this is really just a very technical point from an audit perspective. We did anticipate materiality in our audit to be 9.4 million. That was revised to 10.3 million as we got started. The reason for the revision was the substantial increase in revenues that were reported in the financial statements versus what we had used for our preliminary materiality calculation. Reminding council that our materiality is calculated roughly around 2 to 2.3% of total revenue. And the materiality level, about 10.3 million, comes in about 2.1%. So right in that middle of our expectation. You know, for all intents and purposes, this did not have a material impact on the conduct of our audit. Next slide, please. As we've talked about in our planning session and talked about in our closing meetings such as this, as auditors, we are required to consider the risk of fraud within the financial statements. And very specifically, that scope really is limited to, I would say, the intentional manipulation of the accounts and records to show a financial result that's different from what is actual. This is not unique to the City of Kitchener. Every audit in Canada has to consider these. And incorporate a response into the audit. That response is outlined in the bottom section of our report, where it was primarily limited to identification of high risk or unusual entries through the ledger. And based on the testing that we performed, we have no findings or issues noted whatsoever. Next slide, please. In terms of some of the specific items that we looked at as part of the audit, one thing we do want to highlight is the accounting for obligatory reserve fund and deferred revenue. And for the to remind committee that the obligatory reserve funds are mostly consistent of the development charges, as well as gas tax and some other deferreds. For the development charges, you are required to keep monies collected but unspent in a reserve fund, for which the city does appropriately. That's fine. but the accounting standards say that that money should be recorded as deferred revenue. And we show the revenue in the financial statements, not when the development charges are collected, but when those collections are ultimately spent on the expenditures for which they were collected. So the revenue follows the expenditure, not the collection. In order to audit this, we do look at the controls around the establishing and recording of both the revenue and the cash receipts. We do look at the continuity schedule. So what was the opening balance, what came in and what went out. We agree a sample of those collections to supporting documentation throughout the year, as well as we look at what the money was spent on to ensure it met the criteria of the development related expenses. And it did result in revenue being recognized during the year. A specific change this year was due to changes to development charges from what has historically been the practice of a full collection of the DCs at the time of building permit issue. But as you may recall, there are now a number of properties or development that can qualify for a deferral of development charges, sometimes for 5 and in other cases for 20 years. This has occurred within developments within the city. And at the end of the year, there was approximately $9.3 million of DCs that are ultimately to be collected. So in the old days, that money would have come in already and been reflected in the cash that the city has in its financial statements. Now that is reflected as a receivable on the financial statements and is expected to be collected in future years. We do also note that as part of the work that was done, we did identify a small amount, about $500,000, that was in fact recorded in 2020, although it shouldn't have been. That was then reversed in 2021 and will be recognized as revenue in the future years. Obviously, this amount is not material to the financial statements. Next slide, please. On this slide, we talk about post-employment benefits that the city has. So this is the accounting for the city's sick leave, early retirement, health and dental, and WSIB programs. As you may recall, you are required to record a liability in your financial statements for amounts to be paid in the future under these programs. In order to calculate these amounts, the city has engaged a third-party actuarial specialist, and we have relied on and communicated directly with that actuarial specialist in assisting us in performing our work. We do note that we are responsible for assessing the assumptions that are otherwise used by the actuary, and we found those to be reasonable and consistent with other municipalities in Ontario. Next slide, please. On this slide, as mentioned by Greg, we talk about the tangible capital assets of the city. Obviously, this is the largest single caption on the city's financial statements and comprise a wide swath of assets that are used for delivering services to your residents. We do test this in a number of different ways. We look at capital that was purchased during the year, agreeing to supporting documentation for a sample of those purchases. We do look at expense accounts throughout the city's ledger that might appear to be capital, but have been recorded as expense to make sure we have a complete population in the capital. And then there is amortization expense that is recorded during the year, and we test that to make sure it's recorded in accordance with the city's amortization policies, but that make sure as well that those amortization policies are reasonable relative to the assets that they are related to. We further note when looking at the financial statements that the actual capital spent by the city on average over the last 2 years was approximately 2 times the amount of amortization expense it has recorded. We believe that that is a good ratio. It's demonstration of a continued investment in capital by the city, because recall that the amortization expense is based on the original cost of those assets. So some of those assets are now sort of 40, 50, 60 years old, but the acquisition cost is today's price. So it does make sense that that ratio be at about a 2-to-1 level. Next slide, please. On this slide, we do highlight some of the other major areas of our audit and the focus and the way we go about testing those. I won't read through them line by line, but happy to say that based on these procedures, we are happy with what we saw in the records. Next slide, please. As I mentioned before, there was the one matter within the development charges, about $500,000. Other than that, there were no other amounts that we identified that remain uncorrected in the financial statements, nor did we identify any amounts that management made corrections based on our findings. Next slide, please. On this slide, we disclose whether or not there are any control deficiencies, whether those be significant or otherwise. And again, based on the work that we performed, we did not identify any, nor did we identify any other observations or other control matters that require communication. So that is a very good news story there. Next slide, please. And as I wrap up here, just want to confirm for council that the presentation and form of financial statements is appropriate. It's in accordance with the standards for local governments, as Greg mentioned. And so nothing to report there. And then on the next slide, in terms of new accounting policies or revised accounting policies during the year, there were none. However, I do want to remind council that coming up in 2 years, there's a significant new requirement for local governments to record the liabilities associated with asset retirement obligations. And I know the city is underway with a plan to look at that standard, but we do expect to see some potentially significant liabilities popping up on the city's statement of financial position. Again, these liabilities would represent the estimated future costs to remediate certain assets or properties or decommission those assets or properties under certain circumstances. So with that, I'll conclude our formal comments and pass it back to the chair.
Great, thanks a million, Matthew and Courtney. Great to have you back on the audit. Any questions for our auditors? No? Okay. I think you've done such a great job, Matthew and Courtney, that you've left council speechless, and that happens rarely.
Coming back in was just a smooth transition back in, so I appreciate that. And I guess just as we close, I want to thank Greg and the rest of his team for the help and cooperation that we got throughout the audit. Obviously, we couldn't be here without them, so we appreciate that tremendously.
Yeah, no, for sure. And I think as we met, as we normally do before this meeting, I do want to also acknowledge Greg because, well, and the whole team, quite frankly, because continuing to do all of this in the midst of the pandemic and doing chunks of it remotely and so on, and Greg being new and you being back, I mean, all of that has been challenging. And so certainly want, on behalf of council, to express our thanks both to Greg and the staff team, and as well as to you and the KPMG team.
And just for one final comment, if I may, those of you who read the auditor's report will see that it is dated and signed from the city of Kitchener. Now that we have moved into our location, on Victoria Street. So we're not in full move mode yet. They're still fixing up some parts of the space, but I've been down there many times and happy to be part of the city.
And we're certainly happy to have you down here as well, and part of the innovation district. So thank you, sir. Sorry, did I hear someone? No. So does someone care to move that the 2021 audited statements be approved? Councillor Davey, thank you. Councillor Galloway-Sealock, thank you. Any discussion? All those in favor? All those in favor? Opposed? That's carried unanimously. And I think, Madam Clerk, before we adjourn, can we go right into, or do we have to wait till 2:30? Madam Clerk?
Through you, Mr. Mayor. We would just need a moment to coordinate with staff, and if council would like to begin early, we would need to waive the start time for the meeting.
Okay, well, since I mean, what I'm thinking is we'll take maybe a 5-minute break if people are comfortable with that, and then we can do that and start special counsel to authorize going in camera. People good with that? Okay, so motion to adjourn right now. Moved by Councillor Michaud, second by Councillor Chapman. All those in favor? Opposed? That's carried. You can stay on this. Just mute yourself and turn your videos off, and we'll start back in 5 minutes. Thanks, everyone. Hi, folks. We'll get going in a minute or two, please. Okay, folks, can we come back? Okay. Whenever you're ready, Madam Clerk, we can start the public part of the special council meeting.
Through you, Mr. Mayor, the meeting is live.
Okay. Well, good afternoon, everyone, and welcome to today's special council meeting on June 20th, 2022. The City of Kitchener has aligned with provincial changes to COVID-19 restrictions, and City Hall is now open for in-person services, but appointments are still being encouraged. The city remains committed to the safety of our patrons and staff and continues to facilitate electronic meeting participation for members of the public. Those people interested in participating in future meetings can register to participate electronically by completing the online delegation registration form at www.kitchener.ca/delegation or via email at delegation@kitchener.ca. For those who are interested in accessing the meeting live stream video, it's available at www.kitchener.ca/watchnow. Any individuals who provided written comments to council, those have been shared with council ahead of the meeting and will form part of the public record for this meeting. Before we commence with the agenda items on today's special council agenda, we'll begin as we normally do, and that's by acknowledging that today we're gathering on the traditional territory of the neutral Anishinaabe and Haudenosaunee peoples. We recognize our responsibility to serve as stewards for the land and honor the original caretakers who came before us. Our community is enriched by the enduring knowledge and deep-rooted traditions of the diverse First Nations, Métis, and Inuit in Kitchener today. We have one item on the public portion of the agenda, and that's the in-camera meeting authorization. And so the motion is that an in-camera meeting be held to consider one labor relations matter and one matter of solicitor-client privilege. Does someone care to move that? Moved by Councillor Singh, seconded by Councillor Johnson. All those in favor? Opposed? That's carried. Thank you. And so a motion to go in camera, moved by Councillor Michaud, Councillor Johnson. All those in favor? Opposed? That's carried. So, Madam Clerk, if you want to end the live